I think from a capex standpoint, it's going to be early for people to actually come out and cut their capex, such as TSMC. It's such an important number for them. They're in the business of providing capacity, and so the 38 to kind of 40 plus 42 billion range is something they typically wouldn't cut early in the year. Also, they want to instill confidence in their existing customers. At the same time, it can be a negotiation technique as well. Well, we're keeping our capex high. Please kind of pre-order. Let's get some pre-bookings in. I think that NVIDIA announcement, probably the 5.5 billion. I think some of that was pre-committed, probably wafers that the TSMC wanted to commit to. This is expensive capacity, right? And TSMC's taking a lot of risk. So I don't think they'll budge much on that yet. They'll probably have a lot of tone about uncertainty and tariffs like ASML did as well. But from a standpoint of the stock, I think there is two levels here. There's the tariffs, but also there's a typical kind of semi-cycle dynamics here that we've seen so many times. Everyone has unlimited confidence in the killer application, smartphones, PCs, and that now is AI. And what tends to happen is you get over ordering, you get people kind of a little bit too bullish on end demand, worried about supply from TSM because of the very long cycle times. I mean, it takes 3 months to get your chips, and if you're Google, Amazon, you want to make sure that you get your fair share, especially relative to your competitors. So I think on the margin, people have been ordering probably more than they really need, and you may see a little bit of adjustment there as the year goes on. We've already seen some push-outs in some of the CoWoS, the packaging numbers on the margin. So investors will be looking at this. Number one, if capex is high, demand uncertainty, what's my risk reward? The risk is perhaps there's some excess capacity and you have some margin pressure in the stock in the second half of the year if they don't deliver on the growth numbers. So I think the stock is probably not going to do too much in the next next few months until we get obviously then there's the tariff stuff, right? And that will move everything. That's not company specific, but obviously any clarity on tariffs would help semis quite a lot.
As we continue to focus on TSMC, and we watch this volatility in the market as we saw, of course, the moves in NVIDIA and AMD. What does TSMC need to deliver tonight for the market to stay calm in terms of its bottom line, in terms of its guidance? Yeah, so TSM is one of these companies, at EFM, our kind of strategy in AI, and our performance last year was 46%. TSM was one of these companies, and I think when you look at a TSM and you look at the guidance, you really need to see a bottoming to the numbers. And so you take money off the table when TSM's we haven't seen expectations cut to the degree that we need, and we need to see some earnings cuts across all of semis and TSM, I think. But I don't think it's going to happen this toward. I think we're going to have to go all the way to the July quarter to start to see some adjustments. Like that 25% growth number, or mid-20s, is the guidance looks to the high side at this point. I think people want to see that go to the lower end. CapEx, even better. Like a catalyst for the stock would be to see the CapEx come down to the lower end of the range. And then as the year goes on, kind of the 26 number for the chip scale, the CSPs, the hyperscalers, that's a number that is in high debate with the street right now. Is it consensus shows 7% growth next year? If that's a number, that means most of these companies are still pretty richly valued. If that number is 15% in terms of spending and capex at hyperscalers, then NVIDIA and everything else is undervalued at this point. So a lot weighs on that. I mean, that's the key number. And what ties into that key number ties into tariffs, ties into end demand, ties into macro and monetization. So there's a lot on our plate as we look at our portfolio. When you look at a company like TSMC, is the geopolitics stronger headwind or the AI a stronger tailwind? And I ask this in the context of the R&D that they are now building out in the United States as well. There was a silicon shield in Taiwan, and now they are shifting that to the United States. What is your take?
Well, great. Yeah, a couple key questions there. Structurally, no change on AI as being transformative for the global economy, for productivity. Obviously, transition challenges for certain industries and disruption, but tech has always showed that companies adapt and work through that. So very positive on the directional change there. On TSM's, they've done a great job in managing U.S. politics. I felt to the standpoint of investing huge amount of capacity in the U.S., the initial number was quite low, but in reality, they need to go big, and they know they need to go big, right? Because you get economies of scale there. So I think they're going to be perfectly willing to talk up the U.S., and they are executing well in the U.S. The idea that U.S. is much more expensive isn't quite right, right? Most of the cost is R&D. Once you have that fab scaled and you have the infrastructure in place, the labor cost is a very small part of that. If you get regulations and labor unions, all that fixed, which they have already, then I think they're going to be quite happy with the productivity out of those fabs. And they're going to be perfectly willing to kind of keep upping the numbers on U.S. and do their job. So I think relations to TSM with U.S. government is going to be fine. Of course, Trump likes to claim that it was because of him. But in reality, let's face it, it is a geopolitical a risk with regard to being so concentrated in Taiwan. So I consider the U.S. as a win-win for everyone. It's for TSM, for Taiwan. And it's too small part of overall production to suggest that they can actually sell Taiwan or give away Taiwan, because that's ludicrous, those ideas. Taiwan will remain a strategic part of our global tech infrastructure for time to come, and everyone would defend Taiwan in the world to keep it independent.
With all that's going on in the chip space, what is this doing to chip prices?
So by the way, memory is going to be impacted by the NVIDIA H20, the H20s. I think there's excess inventory, by the way. I think NVIDIA does have too much, not just the H20, but other stuff. So taking this right down is clearing some of the excess that they built. So their pricing is going to be soft, I think, on GPUs, and fine. And the rental market is soft as well. We haven't seen pricing moved as of yet, but I think that would be more a second half concern on pricing, memory and logic as well.
As we talk about TSMC, I don't want to forget about Intel. There was that chatter about them coming in to, maybe take part of it, less than 50%. Does that make any more sense than it did before? Yeah.
As you know, we've known each other a long time, and I've been a structural bear on Intel for a decade, right? Of course, TSM's a fan, so that's a logical view. But I would say that on the standpoint of Intel, TSM would never ever want to invest in an existing facility. It's just too costly, too risky. That's not what they do. They master production and scale it and copy exact. And bringing that in. Could they be forced? I don't see that either. That would be rather, from a legal, constitutional standpoint, forcing a company to buy somebody. It would be much more of a cooperative deal. I mean, I think AMD's original fab, if you remember, when they went fabless, that kind of went to Global Foundries, and that was a consortium. There was some money in there as well in New York. And so I consider much more kind of a government involvement, maybe buying those fabs, private equity coming in, and TSMC doesn't really need to be part of that. TSMC's role would be to scale Intel's volume for them as a customer, as they're already doing, and just be a great supplier to Intel and help Intel compete in the marketplace.
As we talk about the foundries and the making of chips, we're hearing from NVIDIA. They're making a U.S. manufacturing move. The Blackwell will go to TSMC in Arizona. We got the supercomputers in Texas through Hanhai and the likes of Wistron. What is this type of move? Is it going to be the start of a larger trend that it really is going to be moving to the United States?
Yeah, a lot of Taiwan companies are definitely making investments, and to see, I think TSMC moving there was quite symbolic. And you've seen this in like all of kind of Taiwan industries in the day, right? In the days of Thailand, there's the light manufacturing move there. Then you get a cluster of Taiwan companies in parts of Thailand near golf courses, where they can hang on. And then in the U.S., you're getting the same type of thing in Texas. Texas is becoming quite a hub. And it's been a slow, steady progress. So I think from that standpoint, it is a change, but it's been happening a long time. Where there have been kind of missed expectations is Taiwanese and motherboard manufacturers and other sub-assembly moving to Southeast Asia. Where they've been challenged is COVID came in as they were ramping productivity there. So they didn't quite get the yields and cycle times, because of COVID. I think we'd be in a much better place globally if not for COVID. So the ability to kind of offset China in near term makes that very difficult. So it's going to be quite messy and challenging in terms of the short-term interruption in the tariff hopping that we're seeing.